Today, we're going to talk about the Dual City Advantage Fund. And before I start talking about the fund, I have to talk about Dual City's core values. First being protection, and that means protection of capital. This company was founded by two former federal agents, and we pride ourselves on having the highest integrity on how we treat our investors and their invested capital. The managers of the Advantage Fund have capital invested in the LP pool alongside of every investor. Our procedure, we'd like to think, is second to none. We have a management meeting every week. We review acquisitions, dispositions, any new potential targets that are coming into the fund. And before that, it goes through a filter of our sister company, commercial brokerage, and our capital markets team. It goes through strict underwriting before it hits the management group and before we vote on whether or not to acquire it inside of the fund. Our performance, we have an impeccable track record. We've gone through over 25 syndications and dispositions, and we're proud to boast that we have a positive disposition on every single asset. We do realize the market has been increasing over the last several years, so that was definitely part of it, but we do pride ourselves on being good operators. This past year, 2022 and early 23, we made some operational changes to the assets that we have in the fund and increased our dividend yield from 5.5% to just over 7%. The Dual City Advantage Fund is a blind pool private equity evergreen fund. Evergreen means it doesn't close. We do have a liquidity component to it where investors can come and go as they please. There's no lockup period, and the fund can't continue to acquire properties as long as there's any investor redemptions that are not fulfilled. So we're pursuing assets in the Southeast. We're primarily looking for core and core plus assets to build a strong foundation of cash flow. We distribute quarterly to our investors, and we are looking for strong, solid assets that are going to be in the fund for long periods of time. Our deal flow comes from our sister companies. We have a commercial brokerage firm and a capital markets firm and a development services division. And we get a tremendous amount of deal flow through those divisions, and we get to take a look at them and see if they're a fit for the fund or not. Our fund has a dual track strategy. The first being investor capital. We could buy traditionally with cash, or cash and debt, but also our fund is equipped with the 721 exchange component, where we can absorb properties on a tax-deferred basis and take them into the fund and give the owner of those properties ownership units inside the fund. We have been able to take advantage of this using our vertically integrated services and getting in front of owners to discuss the possibilities of using the 721 in lieu of other tax-deferred strategies. Investor returns. The ideal investor for the Advantage Fund is an accredited investor looking to diversify their portfolio into a income-producing fund. Our split mirrors a REIT, where 90% of net profits go to investors and 10% to the management team. We are targeting a 6 to 8% annualized dividend paid quarterly. We also have an internal benchmark to measure our success off of. We take the 3 largest REIT ETFs and we average their returns, and our goal is to be 1.5 to 2 times greater than that benchmark. If we succeed that benchmark by 3 consecutive quarters, we'll reevaluate our unit price, and that's how the investor can take advantage of the equity ownership of the fund by the rising unit price. The Advantage Fund's fee structure is competitive to other fee structures on the market. We distribute 90% of the net profits to investors. there is a 1.5 net asset value management fee, in addition to a 10% manager's profit sharing fee. We are seeking capital partners. We are early stages. We launched the beginning of 2022. Halfway through 22, we kind of took a pause on the capital raising because the rates were pretty volatile. So we paused on acquisitions because we always think, not buying a deal is always better than forcing a deal, getting a bad deal inside the fund. But that's the benefit of having our vertically integrated services. We are not forced to buy bad deals. We don't have to keep our lights on. So we could be conservative, we could be strategic, and we believe in 2023, the opportunities are going to start coming to fruition. We see it in this first quarter. We see more deals coming across our desk. So we're looking for a capital partner to get in the early stages of this fund that have the same vision, have the long-term growth strategy in mind, and capital commitments on the side for when we do start acquiring assets.